This is Mark the Meerkat in with the Stock Picks V newsletter for May 7 through 11, 2018. Well, it's National Bird Week here in the Toledo, Ohio area. All the warblers and other birds are migrating right through the Toledo, Ohio area. We'll have 100,000 visitors from 40 different states and I think 17 different countries last year alone. Yes, it's a big birding weekend here. I've already seen some grosbeak and some other warblers already at our feeder right in our backyard. So anyway, that's what's going on here in Toledo. What's going on in the markets? Let's take a look. Bullish or bearish week on Wall Street, and look at that. Ooh, look at that. Another doji there, and it just closed slightly lower here on the S&P 500. And look, it's run up here. It's in a giant symmetrical triangle on the weekly chart, or you could be looking at it now as a bull flag here. We have two lower swing lows here. We are in, what is this a sign of? It's a sign of indecision, right? And we've been this way for over a month now. Just can't seem to break out or break down. How about on the Dow Jones Industrial Average? Sure enough, look at that. Stuck right here, also in a symmetrical triangle. You could also draw a line here and say, well, we're in a bull flag. Either way, in both of the Dow here as well as the S&P, if you take a look here, as far as it's staying underneath the closing line from 2017. Can I get to the positive territory? Then we have the NASDAQ, and that is in more positive. When it pulled back to that closing line from 2017. We are on this lower support line, and it too is in a bit of a symmetrical triangle. This line is actually from the daily chart. We'll take a look at it in a few minutes, but it closed above that line here on the weekly chart. So this one's looking a little more bullish, and it was actually positive for the week. Small cap Russells, slightly positive for the week, still in a symmetrical triangle itself. Again, these lines are drawn for the daily chart, we'll see in a moment, but clearly it's struggling to get back up to its highs, but it's staying above its closing line from 2017, still positive for the year. So we have a divergent market here. We have the S&P and the Dow struggling to get above the closing line from 2017 in a symmetrical triangle. Then we have the small cap Russells and the NASDAQ that are in a symmetrical triangle but above that closing line, so slightly more bullish. How about bank? Can't get anywhere without bank. On the weekly chart here, it too is symmetrical triangle. It tried to break out above that upper resistance line this week, and now starting to pull back. So we're not in a down leg yet. We have to have two of them with lower highs and lower lows, but that not yet. And look at this for the week here on the VIX. Look at that weekly. Look at how big. Look how, from the highs and the lows here. So that's a huge range here for that candle. It's settling in just about in the middle, right on the 200 moving average on the weekly chart for the VIX, the fear indicator. All right, let's go to the daily charts here. At least take a look here at the S&P 500, just to show you, we're getting tighter and tighter and tighter. Then on Friday, what happened? Kaboom on Friday. Well, let's see here. What was up big? Apple was up big on Friday, and Apple is the largest cap stock in both the Dow, the S&P 500, and the NASDAQ. So if it's up over 2%, hey, everybody else is going to be up. It's pulling a lot of other ones up. So Friday, after being down, down, down for most of the week, boom on Friday. But again, on the S&P, did not quite recover its drop from earlier in the week. But it did stay above the support line here. It stayed above the 200 moving average on Friday. It actually tagged the 200, and then boom, look what it tagged. It tagged the closing line from 2017 and this upper resistance line, and then pulled back just off its highs on Friday. So are these lines significant? I would say yes, they are. Again, what's a symmetrical triangle mean? It means indecision, folks. And so it is tough. Now, one thing I do not like about Friday's big, huge up day is take a look at volume. Low volume on Friday. Lower than average volume on this big up candle Friday. That's a little less bullish. And then let's get in the Dow, very similar there. Big up, smaller volume. But the Nasdaq, boom, 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 and it did break out above its upper resistance line here on the symmetrical triangle, and closed right at the 50 moving average. That's this blue line here is the 50 moving average. Right there, closed right at that line, so there is some resistance there, but has broken out above several resistance. So we'll see if there's going to be follow through on Monday. Small cap Russells on the daily chart, again, they are in the upper part of the resistance here, but it didn't quite make it up to that resistance line, pull up a little bit off its highs, but again, up over 1%. All markets were up over 1% on Friday. Alrighty, let's go to the bull list, since again we are in a neutral trend right now, just a little bit more bullish, only because we came up into it, and we are now in the symmetrical triangle up above, also known as a bull pennant. So let's go to the bull side and take a look at our picks for this week. The first one, I actually have 5 picks this week. ALGN here, ALGN. I actually going to have 2 possible entries on this one. It is in a symmetrical triangle here with these solid blue lines there, because it did punch out up above here. And so the entry for that would be at 279.13. However, we have an abandoned island here in that it gapped up and then it gapped down, so there's a space in there. So if we do not count that little punch up here, a more aggressive entry would be at 266.52. That's where these dashed lines are here. So if you do not use this abandoned data up here, that would be the more aggressive entry, 266.52. All right, our next one is on the first of E-Trade, first of our brokerage firms that are on our list here. High basing still. I had it on, I think, on watch last week, and it didn't break out. So again, this area right here at 61.50 area, it's been resistance. So, but 61.92 possible long entry on E-Trade. This is one that we had on the list. It broke out 3 weeks ago on a bull pullback here. It broke out and it's just been basing here, and then kaboom! Look at this, new all-time highs, tag 70 here on HQY, new all-time highs. You may still be in this trade. Manage if you manage your stop, below this, say the 20 moving average here, the green line. You'd still be in that trade, or you may have stopped out on some of these pierce downs there. Next we have Interactive Broker, the second of our brokerage firms here. Now last week it was in a symmetrical triangle. It did break out on Friday from our original entry area, and now it's, if you missed that, it's in a high base using this $75 as major resistance. Breaks out above that to 75.54 is a secondary possible entry on that. I didn't draw it over here, but that's now a high basing there. Next we have PLNT. PLNT is a high base. I had this one on watch, and last week was at watch. Oh no, I didn't have it on watch last week. I take that back. Possible entry here at 41.53. 41.53 possible entry here on PLNT. And next we have Schwab. Hey, this is the third of the brokerage firms that's in our list this week, and it's high basing here now. And Schwab I did have on watch last week. That's the one I was thinking of. Schwab was on our watch list last week, and now it has developed into a high base at 56.47 possible long on Schwab, SCHW. I do want to call out one from last week. That's all of our picks, but Wing last week we had this one, and on watch it was coming back here. Could be a possible bull pullback. Kaboom on Friday after earnings, but we can't trade over earnings. That one did go up, but for the week, the overall week, it was up 7.9%, but not likely I would have been in that one because it gapped up so high on earnings, and again, don't play over earnings, so wouldn't be in that anyway. All right, let's go to the bear side. Yeah, we're still neutral with a slight bearish biased right now, but we need to keep training our eyes to see these bearish trades. And had you been in some bearish trades last week that we talked about, wow! Look at our big mover list here. There was a lot of play against they went against our short ones. Now we would not trade those long. We would not trade those long because we'd only, when the fundamentals are bearish and the market trend is bearish, that's when we would go short on those. We would not go long. Many of them dramatic turnaround over 5% to the upside on those stocks that should have been short. That's why I put in there, hey, stop losses are our friend, because they would have kept us from not losing the over 5% on those three that were identified. But let's take a look here at some for this week. AMC here, look at that, just falling like a rock. But look, Monday is earnings on that, so there is no trade there, even to the short side. New to our list this week, AXDX. I think it's new this week. Low basing down here at the $22. Look at it, closed at exactly $22. But would be at, again, this is on an even nickel amount, because I would never want to put it at ending in a 0 or a 5. But at 21.50, possible short setup there. Again, because it's on even nickels, the only reason I would put it on the 0 there. You might go to 45 if you don't want to be on that even dime area. Next we have BBBY, identified last week, is a trade not to take, and it's continuing to tell us don't take this trade. Why? What is this? This is we call a broadening pattern, also called the gator pattern, right? And Des is from Louisiana. He says, his mama says, don't mess with the gators, they will bite you. This is broadening out here. The odds are not in your favor to trade this either way. It's getting higher highs and lower lows. Do not trade that one. There's no odds in our favor at all on that. Next, DRQ. This is going to be one to watch. Look, it came all the way down here on earnings. Look at it, dropped, and now it could be a bear pullback. But look at Friday. We had this huge engulfing candle here, so you can't. There's no way you can even get a reward risk ratio on that one. So I would watch this. If you get some smaller candles, possible could set up for a short on a bear pullback there. Meets most of the criteria, but again, not all. Our last call here is on EFX, and it is down here. Now it's low basing down here, possible short at 110.93, 110.93 on EFX. That's it for this week. Now again, the markets are in symmetrical triangles. I'm starting to sound like a broken record, I know that, week after week here. Cash is okay to be in. There is no strong trend in the market, and with this being, we're just coming over the major hump of earnings season, but there's still lots of them that are going to have earnings here. Know any positions you want to get into when the earnings are, because you don't want to get into them. You could get into them in a very bad spot, in an unintended spot. Or if there's any you're holding right now, know exactly when your earnings are, and either get rid of them before the earnings, or at least have some protection for them if you do trade over earnings. This is Mark the Meerkat. Have a terrific trading week, and may your winners run.